Hi, good evening to all. Today's topic is all about the significance of mutual funds or the importance of mutual funds. Before going into the topic, we will look at the meaning of the mutual fund first. SEBI defines a mutual fund as a fund established in the form of a trust by a sponsor to raise monies by the trustees through the sale of units to the public under one or more schemes for investing in securities in accordance with these regulations. In simple term, mutual funds are the pool of funds collected by a sponsor bank, a trust by a sponsor. These money are collected by a lot of small investors. After investing into the stock market, trust got some profit from the stock market. These profit later distributed to the small investors. It's called mutual fund. Significance or importance of the mutual funds are as follows. Mutual funds mobilize small savings from the investors by offering various schemes. The savings of the people are channelized for the development of the economy. Mutual funds helps idle savings to circulate into the economy. Through mutual funds we can collect a lot of small savings from the small investors. These money later on used for the development of economy. Mutual funds provide the opportunity to small investors to purchase the shares of the highly established companies. Small investors cannot purchase shares from the big companies. At that time, the mutual funds will help them. Because of the huge funds, the mutual funds are in a position to buy securities at cheaper rates and sell securities at higher prices. Mutual funds are able to give good and regular returns to their investors. Through mutual funds, we can collect a lot of funds. If it's so, we can buy the securities at cheaper rates from the market and sell the securities at a higher price. As well, we can get good and the regular returns from the mutual funds. At any time, the units can be sold and converted into cash. Whenever investors require cash, they can avail loans facilities from the sponsoring banks against the unit certificates. Anytime we can convert the mutual fund units into cash. Whenever we need the cash, we can approach sponsor banks and we have to submit our mutual fund unit certificate. Then we can get a loan from the banks. The cost of a purchase and sale of mutual funds units is relatively less. The brokerage fees are trading commission etc. are lower. The cost of a purchase and the sale is very less. The brokerage fees or trading commission also lower. There is only a minimum risk attached to the principal amount and a return for the investments made in mutual funds. This is due to expert supervision, diversification and liquidity of units. Whenever we invest in stock market, we can get a high risk and high return. But in case of the mutual funds we can get a minimum risk. This is due to the well management appear in the mutual funds. Mutual funds are managed by professionals. They are well trained and have adequate experience in the field of investment. Thus, investors get quality services now from the mutual funds. In mutual fund the field they are the well trained and the enough experience in that field, so that the investors get the quality service from the mutual funds. Mutual funds offer tax benefits to investors. Mutual funds offer a lot of tax benefits to the investors. The savings of the people are directed towards investments in capital market through mutual funds. They also provide a valuable liquidity to the capital market. In this way, the mutual funds make the capital market active and stable. Mutual funds help the capital market to be active and stable. Because a lot of the savings now invested in the capital market, in which in this way the capital market liquid position is more valuable. Mutual funds now provide finance to industries and thereby contributing towards the economic development of a country. Mutual funds provide finance to for the industry's development, through which countries economic also developed. Mutual funds invest money on the money market instruments. In this way, they keep the money market active. Mutual funds also invest money into the money market instruments like CD, commercial paper, like that. In this way, they keep the money market active. So mutual funds will help the money market to be active and stable. Thank you. We will see you again with another session. Until then, stay tuned, stay blessed. Bye.